can we just give up on 2018 now?
Well, I think it is still too early to judge. Of course, when you talk about the stock market, it's not doing well. Investors tend to look for something which can protect their money. Basically, which we find very difficult to look at in the stock market for the time being. But still, the government, China, trying to do something to stabilize the market. I think if they can, restore the confidence by putting out, certain, liquidity measures which can support the market and support the confidence. Basically, I think you can still pick on, certain stocks which can be benefited from the market confidence.
So it's about capital preservation, not capital growth.
Yes, exactly. Because, well, it is very difficult for investors to grow their portfolio for the time being. Basically, I have been talking to a lot of investors in mainland China. What they have been trying to do now is to protect their value. Basically.
So cash, I suppose.
Cash.
Basically, you're telling them all to get into cash. I mean,
well, cash. Trying to get the money out from Asian market, out from China to Hong Kong to US. Basically, they're looking for something which can provide safer protection to their money. So basically, they need to restore cash because, well, as we all know, Chinese individuals and corporations are facing liquidity problems, and basically they don't have cash, and a lot of corporations and individuals are actually facing bankruptcy and a lot of similar situation. I think cash is the most important thing.
I mean, we talk about the solutions that Beijing is throwing at the problem. I don't think much has been talked about when it comes to why the problem exists in the first place. Why are we here? Like, why is there so little liquidity in China that a lot of these companies are finding it very difficult to make ends meet?
Well, according to the Chinese government, the economy is actually doing fine. When you look at the figures. But actually, a lot of people are facing the real situations is that they don't have cash, and basically the Chinese government are trying to say that because the confidence has been collapsing, they need to restore confidence. But I think we need to do more than that, not just to restore the confidence. We need to inject liquidity into the real economy. Basically not just in the stock market. Stock market is just temporary. All the rescue measures will not be long-lasting. I think real economy take times.
But why isn't there enough liquidity in the first place? In other words, what I'm trying to get to is I'm trying to figure out whether or not it's self-inflicted. Is it because of the deleveraging campaign, or is there an outflow story that we don't know about?
I think in the first place is that the Chinese economy is not doing as well as those figures suggested, in the first place. And secondly, structural reform, liquidity, deleveraging, basically everything has been pushing so hard, has been pushing so hard in the past few years. Basically, all the money, goes to the state-owned enterprises, all the private sectors.
So those triple-R cuts, which are designed to help those SMEs, are simply not working. Is that what you're suggesting? We've had 4 of them this year. Of course, they take time to filter through, but we're not really seeing any benefit from them. Is that what you're saying, really?
I think the rate cut, the reserve rate cut is not really working. It takes a long time. I think taxation cut will be more effective, to make the company get benefit. Reserve rate cut is a gesture, it's a gesture to prove to the corporations and to the economies that the government is trying to work on something. But all those cash may not reach the real economy. This is the situation. That is the problem.